Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Boy, do we have a lot to talk about today. Jobs report just out moments before we started this conversation here at the Roundtable, and constant market volatility seems to be relentless. All of that and a brand new feature that we're adding to the end of the Roundtable that you'll want to stay tuned for. Today's panelists, our regulars, Editor-at-Large Steve Reitmeister, and Resident Research Director Shiraz Mian, Market Technician Kevin Matris, all join us. Shiraz, let's start with you. As far as the jobs report was concerned, it looks to me like it's another two-edged sword. I mean, there was a flood of temporary census worker jobs in the month of May that led to the biggest jump in jobs in 10 years, according to published reports. But on the other side, the manufacturers, the private companies especially, not just manufacturers, but private companies in general, that job creation grew at the slowest pace since the start of the year. So what do you make of this?
By all counts, a very, very disappointing report. On a headline basis, when we see the 400,000 plus number, which comes across as a big number, but even that being bolstered by the census-related jobs, even that came below the headline expectations, which was north of 500,000. But more important than that is the trend in the private sector job creations, where we see a clear deceleration from the last few months. So we created fewer private sector jobs in May, when the expectations was for numbers something in the ballpark of the last few months. So very disappointing. Personally, from my angle, I couldn't see anything positive in today's report, other than the fact that it'll keep the Fed on hold because there is no pressure in the labor market on the pricing side, and then it shows that we are continuing to improve, but at a very slow rate.
You buy that? You in that camp as well?
Right, disappointing across the board, and really this was a time, because there's so much bearish sentiment out there and so much concerns about the European credit crisis, that now was the time in which to serve up a great jobs report and say, hey, our economy, economic rebound is on track here in the United States, and it was a good time to calm nerves, and it did the exact opposite, as you can see from the market's reaction this morning. And really, what in between now and earnings reports in mid-July are going to settle people's nerves down at this stage? So, terrible report, terrible timing.
Right. So, Kevin, as far as the volatility in the market is concerned, we're not expecting to see any less volatility over the near term here, are we?
Yeah, like I said before, I think volatility is here to stay. And let me just say one thing about this this jobs number. You know, yesterday, everybody, as a matter of fact, it seems like week after week after week, everybody is waiting to get this jobs number that is going to show significant improvement, and week after week after week, it never comes. And today was terribly disappointing because you saw 10 government workers, 10 temporary government workers for every private sector job. So it was terrible. Mm-hmm. And this goes into this whole volatility thing. You know, everybody is waiting for good news and it keeps eluding us. Looking at where we are now, you know, today's drop in the market, very, very disconcerting. We're at that 10,000 level. If we break that 10,000, I've said it before, and I'm always bullish, or at least I have a bullish spin to a lot of things. I'm not a negative guy, but when I look at where the market is right now, if we take 10 out with any kind of impunity, I think there is a very, very realistic chance that we could drop all the way down to 95, 96. So. Volatility is here to stay.
Those are some interesting numbers. Yeah. Steve, all of the volatility in the market caused a big outflow of cash from mutual funds here over the past 30 days. So obviously there's fear out there as far as investors are concerned. However, if you were a contrarian investor, would you say the market is cheap right now?
This is what we talked about previously. What fundamentals are people taking a look at? If you were a believer in that this is, the U.S. economy is recovering just fine, and this is a great buying opportunity. Well, today's jobs report puts a big question mark on that. And so whereas I've been fairly bullish moving to neutral last week, I'm a little less than neutral today. I feel that we are probably going to take a run under 10,000 given this information. So not a long-term buying opportunity just yet, because I think we're going to find lower lows So hold on to some of your best companies, get rid of the riskier propositions, maybe even toss an ETF short into the mix to profit from a downward move.
Shiraz, does it pay to be a contrarian here?
Yes, it does. It's very difficult to time the market. And particularly in stages like this, you need to be invested, but invested where is the key question that Steve was addressing. And I agree with him. You have to reduce your risk profile to some extent. I personally prefer staying domestic, staying with companies that are large cap. I want to have exposure to companies that pay good, solid dividends. I don't want a lot of exposure to Europe. Or to even Asia for that in the near term.
Okay, so that gets me to our special feature here that we're going to put at the end of every round table. Each of you has agreed to come up with your stock pick of the week. So Shiraz, since you were on that topic so eloquently, we'll start with you. What stock are you looking at this week?
In line with the theme that I was explaining, domestic exposure, large cap, dividend, a key sector that I want exposure to is domestic financials, not the large bulge bracket firms on Wall Street, but local community commercial banks. I like New York Community Bank, ticker NYB. It's a $7 billion market cap New York-based bank, solid balance sheet, good earnings power, pays a good juicy dividend, currently yielding about 6%. So a very good company.
Kevin, your pick of the week.
Broadcom. They're a chip stock. They are a Zacks #1 ranked company. And what's interesting is that they are a supplier to Apple. They make the controllers for that touchscreen for the iPhone and the iPad.
Oh.
They've got triple-digit projected growth rates, and I think there's about a 20 to a 25% upside in the near term.
Everybody seems happy with those iPad sales.
Well, I'm going to continue with the theme because my stock today is Apple. You know, talk about quality company, talk about one that was growing even when the economy was taking a bad turn. The iPad is a hit. Any reasonable valuation metric puts this stock at $315 or greater, and not surprisingly, during this recent market downturn, it didn't come down that much. So this is a great one to buy during this little spate of weakness and hold to better times.
And for those who don't know the ticker symbol?
Everyone knows the ticker symbol. I'm not going to say it. They all know.
That's the latest from the roundtable. We hope that you've got some valuable information from it. Hope the week ahead for you is a profitable one, and we'll see you next time. Thanks for joining us.